Good morning, good afternoon, everyone. Welcome to Expo Dubai. My name is Malina Turcuț. I'm the CFO of PrimeDash, and today I'm going to be your host. I'm grateful to all of you for attending from all around the world to our event that is podcasted on Facebook, YouTube, and LinkedIn. I want to bring special thanks to PrimeDash team and to the Romanian Pavilion team for all the support in organizing the event. The year 2021 was a very important one for the ESG policies. Why is that? Because the risk that we assume by not changing our economies and our lives is higher than ever. The COP26 summit was the main event that gathered the most important leaders to decide the actions that are going to be taken for our future. And here at Expo 2020, we continue stressing sustainability subject. From smart cities to smart economies, our future will take us in a tech world where we will create lasting added value and we will promote health and well-being, financial security, and the minimum of carbon footprint. But how can we create smart economies? Which is the role the financial institutions have, and why Fintech is going to play an important role in the smart financial ecosystem of the future? These are the top questions that are going to have an answer from our guests today, from our speakers. So it's my pleasure to introduce them, and I will start with the ladies. Madalina Popa, as the Financial Service Industry Director and Eastern Europe for Microsoft, Madalina brings with her more than 10 years of experience in dealing with financial service digital transformation. She sees possibilities in every people and every situation around her, being an optimistic person. She will attend our event from Romania. Welcome, Madalina. Cosmin Cosma.
Good morning.
Good morning. Cosmin Cosma is the co-founder and CEO of Finkware, an European fintech startup managed from Bucharest, in the mission to put open banking at work for businesses. The company empowers banks and enterprises to leverage the availability of financial data, but today he's our guest as the president of Romanian Association Fintech. Welcome, Cosmin.
Thank you very much for having me here. Looking forward to our discussion.
It's our pleasure. Sebastian Văduva, as Dean of Griffiths School of Management, professor, entrepreneur, and business technology executive, he teaches, consult, and publish in the areas of ethics, entrepreneurship, and technology. He believes an organization's most valuable asset is human talent and ideas, and he has made his vocation to help develop it through trainings, coaching, mentoring, and networking. Welcome, Sebastian.
Good morning. It's good to be here.
And not the least, Madhu Sila. Madhu is the founder of PrimeDash, an international fintech that has developed BI solution to bridge the gap between banks and SMEs. Prior to this role, Madhu was the CEO of System and Solution International Group, a global management consulting company, helping businesses with innovative financial operations and management systems. Welcome, Madhu.
Thank you, Malina.
Before starting with the challenging questions, how was your coffee this morning? Madalina and Cosmin, you are in Romania, so
yeah,
it's
a little bit
it's
rainy.
A good hour.
Yeah, but a little bit rainy here in Bucharest and cold, not so warm as in Dubai.
How about you, Sebastian? Did you have time for a good coffee?
Oh, yes. I had to have a strong espresso. It's 3 o'clock in the morning here. So.
And you, Madhu?
Good coffee.
Good coffee. That's good then. Regarding the topic that you have for today, I have a question. If we consider sustainable actions, which is the phase the European and Romanian banking system has achieved already? Madalina, please, the virtual floor is yours.
Thank you, Malina. Indeed, this is a very interesting topic because we are hearing a lot about sustainability. And if you look at the interviews that the president of the banks are giving or the president of every company is giving, they are talking a lot about sustainability. And if we look at the European banking market, And of course, we are talking about Romania also. It's not such a big difference between us and other countries. When it comes to integrating the sustainability, for sure, everybody is talking about it. Everybody is including this in their strategy, in their long-term strategy. In every board discussion, it is mentioned, the sustainability area. In some cases, the banks nominated already a person or they have a new role. In some cases, the chief risk officer is taking this area. In others, they have a chief sustainability officer already declared. So this is a very important one. On the other hand, if we look at some European reports, like reports coming from European Commission, I read recently about one where it was stated that Europe's banks are proving slow to act on sustainability, and they have only a limited grasp of their exposure to environmental, social, and governance-related risks. In this huge report, 2,073 pages, if I remember well, the main topic was that despite increased efforts by banks and supervisors, this study finds that the pace of implementation to achieve effective ESG integration within risk management, prudential supervision and business strategies and investment policies needs to be really accelerated. Now, if I have to sum up, and if I'm looking at the countries where I'm acting and where I'm working a lot with the banks, the Central and Eastern Europe, how we call it, I would say that sustainability is indeed in everybody's minds, but in the majority of cases, the answer to the question on how to become more sustainable is the most difficult one, and is the question that is not covered yet. So we are not talking about reluctancy or carelessness, but rather about the fact that we have a new topic that nobody is yet very aware how to proceed further with some concrete actions. In the same time, there is another challenge, and we think about a situation where a bank receives a request for a loan coming from an oil drilling company that indeed they want to do it with the lowest impact on the environment. But the question is how to evaluate this kind of request, what KPIs you should introduce, and how you can introduce sustainability when you are talking with a big company coming to ask for a loan for drilling for some oil. So this is the biggest challenge, I would say. Also, another thing that I wanted to mention is about the power of authority, let's call it like this. If I'm comparing the Greek banks, for example, with the Romanian banks, in the Romanian market, for example, we see a lot of banks that are not state-owned, or that they are not Romanian banks. But in Greece, we see a lot of banks that are coming from there, and they have much more authority and power to implement and to decide about the sustainability strategy. In Romania, we only see a few banks with maybe Banca Transilvania or Czech Bank. They can make their own sustainability strategy. But the others, the majority of the other banks, they need to comply with what the mother bank coming from other countries is saying. So maybe this is the biggest challenge for Romania, if I have to compare it with the European market.
I have a question here. The sustainability bring new business opportunities, but these new business opportunities have a chance from, are they consider risk investment from the banks, from the bank side? Because it's very important to know if sustainability will have the financial support from the financial institutions too.
Is this a question also for me or for the?
Yes, for you, Madalina. Sorry.
Definitely, it's a very good one, Malina. So sustainability has to be implemented, of course, first in the risk area. And if we are talking about risk, definitely it has to be redesigned completely. And sustainability for sure will be a disruption for the risk departments of the banks. I'm completely sure about this.
Thank you, Madalina. Cosmin, how about your
these new trend of sustainability? Although I believe the first time in which the ESG term was coined was in 2005. In a report by United Nations. So these sustainability policies, at least in our part of the world, in Europe, are incentivized also by the regulatory and by the European institutions. So the banks might already see them as opportunities because there is such an incentive. For example, I just found out that in my next shopping mall, nearby shopping mall in Promenada Mall in Bucharest, there is a consumer finance company that is giving better interest rates for any sustainability related loan, like buying an electric car or an electric bicycle and so on. So these policies are not only at the policy level; they came in the street. They are nearby us, and there is an incentive that comes from the policies and the policymakers in order to implement sustainability.
These are great news, Sebastian.
Yeah, I'm a little more pessimistic about this. I mean, let's face it, guys. The Glasgow event was a failure, and everybody loves sustainability. However, the biggest drawback of sustainability is that it's very expensive. It is much cheaper to develop the traditional way. And you look at the Chinese model, and again, I don't mean to criticize it because they're just perfecting what Americans and Europeans have done for centuries. But the fact of the matter is that traditional development is inexpensive. And most of the traditional banks that we have are creatures of the traditional system. In other words, they were designed to service the traditional economy. And the traditional economy, by and large, is a traditional based on tangible assets. And that's why I'm a little more critical of what's going on in the banking system. Unfortunately, what I see happening in Europe and in America is a lot of the banks reacting to government subsidies. In other words, they're just kind of waiting for the government to come and give money, and whatever money the government gives, the banks kind of react to it. I don't think, or I don't see, to my knowledge, any kind of policy themselves. And let's face it, guys, governments are already in debt to levels never seen before because of the COVID and some of the other things. So I don't expect the governments to be able to continue to dish out money like they have in the past. That's why I think that the banking sector needs to figure out a sustainability policy that is truly intrinsic. In other words, they're going to do it because they really believe in it. And they need to finance new companies and new initiatives that are not necessarily part of the traditional economy, but they are part of the new digital economy. I think that's the solution. We have no guarantee that the new digital economy is going to solve some of our environmental problems, but they have a better chance than the traditional companies. So again, I don't mean to be critical of China or the traditional banking system in Europe, but I wish they would do more than just kind of wait from government initiatives. You know, the government says jump and they say how high. I wish they would have kind of like their own sustainability ideas and their own creative initiatives.
Thank you, Sebastian. Madhu?
Yes, thank you, Malina. So I think I will just piggyback on the point that Sebastian made. essentially, when we talk about sustainability, why are we talking about it today? And why is it such a big issue? And I think pretty much everybody really agreed, from people in the academics to the people who are really in the trenches with financial modeling and working either in stock exchanges, and those people leading the big financial institutions. They essentially realize there's 6 main problems. This is why we're talking about sustainabilities. They understand right now, number one, that the traditional banks are extremely limited. Okay, there is really, like Sebastian said, their models were sort of perfected in 400 years ago. It worked. It doesn't work anymore. And people also understand, number two, that it's really hard for your average small and mid-sized operation, a company, to get easy access to financing. Okay, so they want to do something about it. And we also understand that a lot of small businesses, it's really hard for them to make good financial decisions because they don't have the capacity, nor the technology, or even the expertise or knowledge to really make those good financial decisions for their companies. And also for a lot of SMEs also, they cannot manage risk properly. And for the entire industry, we also realize, and I think we may get into this a little bit later, there's a lack of big data analytics. You know, everybody have their data segmented. They sort of just hold on to themselves, that data. But when we talk about markets where we can combine data from continents or from countries, and then we can take all those data together and decide, okay, this is what we're going to do for regional economies, and this is what we're going to do for the global economy. We like that. And finally, there is essentially a lack of digitalization in a lot of different processes, whether you're talking about loan processing or any other processes. It's not fully digital. So you cannot be sustainable where half of the company are going full digital and other companies are essentially using paper-based systems. So when you take those 6 problems and then you essentially marry it to where we are right now with the financial institutions, you realize, okay, these guys are essentially too restrictive and they're highly bureaucratic. So we want to move away from being sort of restrictive and highly bureaucratic to be sustainable. We have to essentially change that model. We also realize that a lot of these financial institutions cannot analyze companies properly because they don't have the true access and understanding of a company's real needs and also real need for financing. And also a lot of these financial institutions cannot manage the problem loans. Problem loans are, okay, if somebody comes and get a loan, and if they're not able to pay it on time, what do you do with that client? Okay. And the biggest problem, in my opinion, when we talk about sustainability is that the banking ecosystem, especially the financial ecosystem, they do not provide each customer individualized service. So essentially they have their service listed on their website, everybody take it or leave it. But I believe that through sustainability, we can create a model where each customer, based on their spending limit, based on their habits, and based on their financial execution and performance, a bank can automatically, through smart technology, provide customized service.
That's a very good point of view. Thank you, Madhu. To continue the discussion, how should fintech innovate to create smart decision-making in banks and financial institutions? Did fintech understood the market need? Let's turn the floor to Madalina, please.
Yeah, just wanted to mention before that I think me and Cosmin, we are the good cops today, right, Cosmin?
Yeah, we are defending the banks.
Exactly.
We're not against the bank, guys. We think that the banks need to be grafted. they need to be improved.
It's okay, Sebastian. Leave me and Cosmin to be the good cops. It's okay. We didn't speak about this role play, guys, in the audience for sure. Yeah. So coming back to your question, Marlina, definitely there is a lot of room to improve here, because fintechs, for the moment, they are not focusing too much on sustainability products, or they are not thinking about launching some products and services which are under the sustainability umbrella. So me, at least, I am looking at this kind of fintechs in all the CE areas. We are covering 30 countries with CE, and we don't see too many fintechs wanting to do this. But on the other hand, I wanted to answer to this question with an example that we have with a fintech in Italy, which is called Flowy. It's the fintech of Mediolanum Bank. Flowy and Microsoft, they developed a banking platform, secure banking application to increase sustainability and personal health based on an in-app and third-party data. Basically, this fintech wanted to attract millennials customers with a unique and modern banking experience. They wanted to disrupt the way the old and traditional banks were engaging with the millennials. Also, they saw this as a huge opportunity to differentiate themselves with the other banks. In the same time, complying with the regulatory requirements coming from the European Union regarding sustainability. So what we did together with this fintech, with the fintech of Mediolanum Bank, we have integrated artificial intelligence in this application to review customer data and test behavioral nudges, but also to follow the implementation of the sustainability KPIs. For example, this application was tracking the offset carbon impact. And these third-party applications that were integrated with Flowy were providing information on CO2 impact of every euro that was spent by the users of the Flowy credit card. So and the users could also plant trees to automatically offset their carbon impact. And this kind of information was transmitted in the application, and that user was receiving a bonus or some points for their profile. So this is, I think, a very interesting example of what the fintech can do and how you can position a new fintech or a new neobank in order to differentiate yourself on the market.
This was a very good example. Thank you, Madalina. Cosmin?
Yeah, so I will start a bit from Sebastian's view on the banks not getting in the jump before having the regulatory order to do it, and I will say, there was this American philosopher John Rawls, which I remember from my university studies, that he said that any practice, it's in the nature of any practice, meaning institution, to preserve its power and status. The banks, what are the banks doing is preserving the power and status. In order to do this transformation that we need for the sustainability and more specifically for the digitalization, you need to have some market power, some market tensions in order to do it. But like you said, in the sustainability environmental issues, the old ways are cheaper, and the banks don't have, the financial institutions don't have the incentive from the market. But this is, from my point of view, exactly what the institutions and the regulators need to do. Need to move forward the things in order to make this happen when the market doesn't naturally come to make the transformation. We are yeah.
Sorry, Cosmin, sorry for interrupting. Sorry, but do we have a market already existing?
It should be a market, but right now what the regulators are trying is to create it. Why? Because, and we have a very interesting environment right now. We have two important things. I get rid of the geopolitical things like Russia and US and so on. But I'm looking right now at the things that are in the markets. On one hand, you have extra liquidity, so money are not a problem. The Fed and the European banks are putting money all over, yeah. And the second is the scarcity, because if you are looking at the old ways of energy, we can find it that it is cheaper right now, but the scarcity is there, is embedded on a medium term. So in this case, if you don't have the incentives from the market coming to move things, the regulators should do this. And going from this part of the sustainability big phenomenon to the digitalization, it is the same. The banks used to work with a lot of paper, with a lot of people, and they had a very good model. They did a lot of money from that model. So there is nothing to push them disrupt. So you have two situations, and I'm taking as an example open banking. Open banking in Europe is regulated, is driven by PSD2 regulation, and tries to move the things what the banks don't want to move, because they don't want to, lose the captivity of the customers, like Madhu said. They want to stay with that captivity embedded, and the regulators move the things there. While in United States, until this year, with an act from Biden administration, there was no regulatory burden for the banks to open their APIs. And you saw the market didn't, because they incentivized, it was no incentive, the market didn't move. So when we are speaking about digitalization, you need to have both the regulatory and the market. In order to provoke the market, the fintechs are here in a call to do things. And of course, right now, sustainability is not the biggest priority of the fintechs, because they need to get rid of paper first and branches, and then we'll go to the sustainability part.
Thank you, Cosmin. Sebastian?
Yeah, I'm going to take a different approach than Cosmin had. I think that we need to create, and again, I'm speaking as an entrepreneurship professor, I think we need to create a new category of entrepreneurs, and I call them environmental entrepreneurs. And again, I don't expect them to be coming out of Asia. I don't expect them to come out of America. I think Europe is best positioned to have this new category of environmental entrepreneurs. I think that the challenges that we have, the environmental challenge that we have, are best solved by entrepreneurs. Now, I'm not against big banks. I'm not against governments, lending a helping hand. I'm just worried about governments and big banks acting like they want to support this, but in all actuality, not caring of the results. In Romanian, and the three of us are Romanian here, we have this thing, formă fără fond. And this is very, very common whenever you have big institutions or when you have governments where they act like they want to do. They come out with all kinds of policies and strategies and big reports, but in actuality, nothing happens. So my question is, who is going to attract and who's going to support this new category of environmental entrepreneurs? I would love it if the big banks would do it, but the big banks have their own inertia. They have their own, history. They're very successful. By the way, they're very profitable. Look at the profits that banks have made in the last 30 years. They have very little reason to innovate, to change business as usual. So my big hope is from the fintechs. So I'm hoping that the fintechs are going to come in and they're going to disrupt the market and provide some creative destruction here. Where they're gonna go to the environmental entrepreneurs and say, look, you got a wacky idea, you want to try something in order to solve some environmental problems, we're going to finance you. Don't bother going to a bank, because the bank is going to ask you, what are your hard assets, things like that. We will give this to you because we have an incentive, and also because we are digital. We can unlock value where traditional banks don't or don't have the tools for it. So that's really what I'm hoping that fintech is going to do. And I think in the long run, this is going to put some healthy pressure on traditional banks. And traditional banks are going to be grafting some of the fintech philosophies and practices and service this new category of entrepreneurs. I was shocked by the Glasgow, how little was spoken on entrepreneurs innovating in the area of sustainability. It seems that everything is, big government, big corporations. If people think that the shell company is going to innovate, they got another thing coming. It's just not in their DNA. It's not in their nature. I'll stop here before I get in trouble.
No, it's okay. Madhu, Sebastian said that we have to take the SMEs to get them bankable and to go together to the banks. What do you say about this?
Okay, so being a fintech, we also have a lot of friends who are in the fintech world. So when we talk about opportunity, these are some of the statistics I like to share with some of our friends, and it's very astounding. If you think about it, there are for some of the studies that we have read, there are approximately 400 million SMEs around the world. Okay, SMEs are established businesses with maybe a brick and mortar operation, either online or so on. And then there are 582 million entrepreneurs around the world. So if you take the numbers of SMEs plus the numbers of entrepreneurs, you almost have 1 billion people, who are either have a traditional brick and mortar operation or are doing entrepreneurship, or they are engaged in some type of business activity, either from their home or so on. So essentially, 1 out of 7 people is either going to be an SME or an entrepreneur. The next bits of statistics. One of the biggest problems for those entrepreneurs is cash flow. That's number one, cash flow. How do they support their business operations? Okay. And number 2 is essentially how do they go to those financial institutions to provide the guarantees to get those. And we also understand that almost 85% of those businesses, those 1 billion people, 85% of those businesses are already using some type of fintech. Either it's a banking application, they are using some type of SaaS software, okay? And most of them, 63% of them, are very likely to use any type of products that are related to AI, machine learning, either some smart technology. So the market is wide open, and banks alone cannot provide that need. Banks alone, and we've talked, they too slow. They are essentially operating out of the 19th century. And I think that we need a new wave, just like Sebastian was saying, a new wave of fintechs who are going to go after specific industries, either the environmental industry, either the financial industries, in the banking, the payment processing, even order the small payment. Right now, I am in Africa, in Senegal. Here, mobile money is really important, where people can send money to each other just using their smartphones. So if you are an entrepreneur in the fintech world, the market is wide open. Now, what do we have to do, especially at the government level and at the institutional level, is that we need to make it easier for those fintechs to get off the ground. We need to give them the ability to access cash flow or to have loans so that we can go serve that need. So for 1 second, every time, and it's a bit frustrating because you can have a lot of these fintechs who have a great idea and who are prone to almost serving 1 billion potential entrepreneurs and SMEs, but yet you go to a bank and they're asking you for hard assets for guarantees. So at the government level, we need to understand that there's a huge opportunities. Not every business, every fintech is gonna become a success, but they also must understand that the market is wide open. There's a lot of potential customers, and an idea that hasn't been proven by ARR or MRR, which is the silly standard that most VCs put on most investment decks. Oh, what's your ARR? What's your MRR? If we can get past that silliness, we can get people to really start not only helping those businesses, but create a more sustainable future. We're going to create opportunities. We're going to create income generating mechanism, and then we're going to bring the whole world together. The market is huge. We just got to go for it.
Thank you. Thank you, Madhu.
Yes.
Data connectivity helps economies to achieve transparency needed for the ESG policies. Is Romania and European economies ready for data connectivity? Which are the options that they have? Madalina?
Well,
do we have too many options?
I'm trying to answer to this question if Romania is ready. I would love to say yes, but I don't know if I can say it, and I don't know if I'm saying yes if it matters. I think the government is the one that should say yes. But what I would like to comment here on this question is related to what Madhu was starting to say one question before, related to data and how the data is perceived by the banks, by the fintechs, by all the companies. Indeed, when we are talking about data, especially in the context of banking, the banks, the traditional ones, they are staying on a lot of data and they are owning a lot of data. And of course, data is the new oil, and they should look at the data as the new oil, and they should work with it and interpret it. But in the same time, I see a lot of challenges coming from the old traditional banks related to data. Data is very fragmented, it's widely dispersed and disconnected. Business lack the tools and applications needed to produce, aggregate, and make sense of ESG data and classify and differentiate between green and brown assets. Current processes remain very manual to aggregate ESG data. There is a lack of access to raw data, siloed where present or not well aggregated. Inability to track and monitor company progress via ESG applications. Lack of standardization and tool sets and applications to monitor and track across the financial institutions. All these are very valid challenges, and the big banks are working with this. They are very slow, of course, and this is why I'm coming back and stating that in this case, technology will help a lot, and especially the artificial intelligence family. Solutions like machine learning, where you basically train the robots to collect and interpret data, to do predictive analytics, to tell you how to act in the future by having at your disposal for the moment some KPIs. Also, natural language processing, being able to collect data from any source, even if it's verbal or written. Cognitive services and biometrics, automation and robotic process automation can sustain the efforts of data connectivity and data processing for sure. And I'm really hoping that in the next couple of years, both banks and fintechs will understand the importance of artificial intelligence, and they will start using it like in their day-to-day life, not like in a nice to have, because in many cases right now it is a nice to have. Yeah, we will do it, but not now.
I want to come here because this is the favorite subject of my life right now. Data and interconnectivity, because I'm a founder of an open banking startup, it is something that wakes me at night. And also in terms of FinTech Association, we are looking very, very serious to this issue of interconnectivity, because it is a pillar on which the FinTech most of the FinTech should be based on. Let me tell you like this. First of all, Romania, if it is prepared, they have data. So there is data. Everybody is prepared to share data because there is data. But in order to do this, the action to do it, it's still a lot of things to do. In terms of the banks, I'm not on the same side with Madalina. I'm not optimistic at all. I'm on the same side with Madhu. They are operating from 19 century. Believe me, I'm after 4 years in going and evangelizing open banking and data analytics to the banks in the whole region of Central and Eastern Europe with a lot of banks. And I can tell you after 4 years that I don't have any hope. They are not able, and they won't be able, with some very small snowdrops or exceptions, to do something with their data. There are fresh industries like telecom from the 20th century that have a chance to use the data, but not the banking, which is 19 and even older. The only way in which they can do something with the data, with their internal lack of data, is to work with fintechs like Prime Dash, which is a member of our association, like a lot of others, iFactor, Landrise, and so on. I can name a lot. Most of our members are related somehow with data. And for example, the biggest strategy for us right now, one of the main actions that we are aiming to do in the Romanian ecosystem is to connect the fintechs to the public data, like the National Treasury and so on. So don't hope on the banks. Sorry, Madalina, I know it's good for big vendors of cloud to try to sell to the banks, but not the banks will be the one. The fintechs can come here and help the banks if they know how to partner. It's not a matter of the fintechs knowing how to partner with the banks. It's a matter of the banks to understand and learn how to partner with the fintechs. And I want to switch the things, because usually when you are speaking about fintech and startups, there is a lesson in entrepreneurship how to work with the bank. They need to learn how to work with the fintechs, because it's their bread in the future to be conserved. It's not the fintech's brand in the future to be conserved, because there is a big opportunity for fintechs.
Tell us how you really feel, Cosmin.
We have different opinions here.
Sebastian,
your turn.
If Cosmin took such
answer that, right?
Go ahead, Madhu.
You should get. I was asking Melina. At least you should give Madalina an opportunity to before we get to Sebastian. But at this point, I want to hear this out. I want to let those two figure it out.
No, for Madalina, I just want to say, Madalina, there is Microsoft for Startups Global Program in which both Thinkware and Prime Dash are members, and this is the chance for the data to be interpreted and used in a real market.
Okay, can I put my my academician hat on? There's I think at least 3 reasons why we are in the mess that we are in. Number one, in the past, power was always about opaqueness, controlling of data. So the 19th century model, or the traditional model of having power, is by not sharing your data. If you're the only one who has the data and the rest of the people don't have it, then you have the power. Number 2 reasons, we have this bureaucratization. So whenever you have bureaucracy, you have a lot of turfs. So everybody's kind of like building their own little turfs, and they have absolutely no incentives to sharing their data. On purpose, they make their tracks wider so the trains cannot come from west to east. And it's a model, that the Soviet Union did back in the 1930s. So that's on purpose, where every department has their own little silos. And then the third issue that we have, and this is, the Ottoman legacy that we have in Romania, a lot of the data is not accurate. People just sort of write it down, and it doesn't mean anything to anybody, and you cannot really trust it. So I think that the first step is we have to be aware of this, and we have to start teaching people that in the 21st century, you actually become wealthier, you add value by sharing information, by having transparency. Because I don't think there's an issue of we not knowing that there's tools out there to communicate on the information, to interpret the data. I mean, I love the AI tools that are out there, and Microsoft is a leader in this field. Of you go with this mountain of data to them, and then they're going to tell you all the wonderful value that you have in there. But I think there's an issue of people unwilling to share that. people still think that if they hold on to the data, if they control it somehow, if they don't share it with the people, they're going to have the power. So here, Cosmin, I would recommend that we do more in educating people that transparency actually yields more results versus opaqueness of the old system. So that's my comment on the sharing of information and communication. I don't think it's an issue of us not having the tools. We have great tools out there. I don't think we have the willingness. We don't think that there is value in us sharing information within an organization and outside, with the vendors and the clients and things like that.
That's a very good point of view, Sebastian. Madhu?
I can let Melina jump in and respond to Cosmin, or I can get ahead. Madalena, it's up to you.
Thank you. Thank you very much.
She's a defender of the faith.
Yes, I will give you my time if you want. It's your call.
No, it's okay. We Microsoft, we are working a lot with fintechs, with banks, and we are encouraging a lot fintechs to come and be very vocal. And we even have, as Cosmin said, we have programs to incentivize and to help fintechs and ISVs to go and pitch cloud, AI, and so on to the banks, to all the traditional banks. So we are doing a lot of efforts. But I think you saw me, you understood who I am. I'm the kind of person delivering good messages because I believe in the power of the positive message, even for the traditional banks. When they see nice person saying positive stuff about them, I really trust that they will change a little bit. Thank you, Matt. Yeah.
That's right. So when we were talking about data, so more often than not, especially if you talk to banks or the average person, they really ask, like, what is the power? What can I do with data? So at Prime Dash and some of our friends in the fintech realize we can do so much. One of the things we can do is what we call the intelligent process automation, okay? We call it IPA. Or we can get into the robotic process automation, which is RPA, or the AI, artificial intelligence, or the machine learning, ML, and also the DPA, digital process automation. And you tell these things, like, oh man, these are big words. What does that mean? Very simply, and I think us, the nerds, those people writing formulas, AI formulas, like, the Prime Dash lines of coding, we almost have 800,000 lines of code in one of our products. And when you get to the deep sort of mechanism of how a code works, you get people to sort of tune off. And especially, I talk to banks managers all the time. So sometimes I sort of eliminate from my vocabulary the buzzwords. I just go and talk to them simply. They say, okay, you have all this data. You're processing, thousands of loans every year. You have customers making payments. You have their bank statement. You have all this data. What are you doing with it? And then the moment you start talking about this buzzword like AI, ML, they tune off. So I say, look, this is what you can do with your data. It's a very simple sentence. Do you want to engineer the success of your customer? Say, okay, I understand that. How do I do it? You help them make good financial decisions. Okay, how do I do that? You're going to simplify interactions. That's cool. How do I simplify interactions? You got to speed up the processes. And they say, well, how do I speed up the processes? Well, you go ahead and get Prime Dash. It's that simple. So this is essentially our pitch. And then they say, well, why do I want to make my clients more successful? Well, if you're a banking client, if you have a bank and then you have 1,000 clients, don't you want all those 1,000 clients to be operational for the next 10 years? Yes, because if they're operational, they're going to keep on doing banking in your financial institution. They're not going to file for bankruptcy. They're going to have more money to put into their savings account. And if they put money into your savings account, you have the ability to take that money, invest it somewhere else, earn interest on that investment, and make money. So by you using data, you get your customers to be more successful. If they're more successful, then you have the ability to keep them longer. If you keep them longer, your cash vault increases. And if your cash vault increases, everybody's happy. Let's pop the champagne. Let's go to Orlando, drink a pina colada, and go to Disney World. Everybody's happy. So we have to take data, sort of aggregation and data manipulation and data analysis to a level where some of these banks, because you'll be surprised. Sometimes you talk to some of these bankers, and the moment you start using this buzzword, they tune off. And then us who are experts in this field, we need to also start to understand how do we relay that message into a way that they can consume it. And then we must also sell it in a way that they see their ultimate benefit, which is I'm going to make more money. At the end of the day, this is what it's all about. Can I make money by using your technology? And if the answer is yes, then you just got to explain how to do it. It's that simple.
Thank you, Madhu. Thank you. To conclude the discussions from today, how can we create the smart environment by connecting people, businesses, and economies to obtain the same result, sustainability? And if here the sustainability will refer to transparency, it's a good point too. Madalina, please.
Well, this is a big topic. I think it should not be the last question. I guess we should do another session for this, because we can
For sure, we'll have to organize another one and to have more bank representative in our panel.
Yes, definitely. We need banks in the panel also. I would like to mention only one topic here, because I think for the first time we have sustainability as an area that can be the one not only aggregating data, as we discussed before, but also gathering all the banks in the same place. I think sustainability is the first topic where we should not speak about competition between banks. And I would love to see, for example, all the banks in Romania. I would love to see National Bank of Romania. I would love to see the Association of Banks in Romania. All these guys to speak about sustainability, because it's not about competition here. It's about competing with your own KPIs in terms of sustainability and trying to position to be eco-friendly, to be environmental friendly, to reduce CO2 emissions, and so on and so forth. So I think, and as I said, I would love to see all the banks in Romania with the national banks coming all together, staying at the same table and starting to think and act about some concrete stuff. What should we do? Also the fintechs, they should invite the fintechs. They should encourage ISVs in Romania, fintechs in Romania, to come with ideas. Okay, we are big elephants. We don't have ideas what to do with this sustainability topic. Guys, Prime Dash, ThinkUware, come, tell us. You are much more innovative. Tell us what to do and let's see how we can work together. This is something that I would really love to see in the following next 1 year, let's say.
That would be great.
We are waiting, you know, my email and my mobile phone is open all day long for this call from the banks. And taking from here, I want also to answer that it's my way of doing things as an entrepreneur to fire up the discussions. And thank you very much for being a partner with me all together. I want to point out some like my conclusions on this, and the conclusion is quite optimistic. Why? Because not because I want to be nice, but because I really believe in the optimistic part of things. That's why I'm fighting with this fintech association and with my company. So despite the fact that like Sebastian and Madhu and we talked here, the fact that sustainability is not the cheap thing. It's not market driven, incentivized. It's not incentivized by the market to exist. Yeah. And despite the fact that informational asymmetry, like you said, Sebastian, it is one of the, the core layer of capitalism, of classical capitalism. That's where the value is created sometimes in capitalism from the informational asymmetry. And the banks are, built with bricks of informational asymmetry and captivity. Although despite these, I'm really optimistic because I see a lot of will from not only from the regulators, but also from the real people, from people eating small portions of beef in order to be aware about the sustainability. People, having their trash in cans for plastic and so on. So there is, a habit change and mentality change at the real people, and there is the regulatory coming and putting some fire. Then the banks, the capitalists, I believe in the middle, will start to move. This is my optimistic. And fintechs here, although it is digitalization and fintech is still a prehistory in its prehistory age, I believe fintech is the trend that will disrupt and make any of the banking dinosaurs survive if they want to survive.
Just so we're clear, we love the banks, right? my answers is
you
gonna
love
be,
the bank.
There you go. My answer is gonna be short but subjective. I think that the best way we can create a sustainable economy is by encouraging the quantity of entrepreneurs and especially the quality of entrepreneurs. So we need to have more entrepreneurs out there. I am really concerned about national governments doing unfair competition for entrepreneurs. In other words, hiring large amounts of people and depriving them of the opportunity to be entrepreneurs. So in my opinion, that's one of the big challenges that we have going forward. And I think that the way we can create more sustainability is just throwing out there as many entrepreneurs as possible, as high quality entrepreneurs, equip them with the right tools and let them figure it out. Let them come up with a gazillion ideas of creating a new sustainable economy, from educating the public to inventing something new way of, doing some kind of a green energy. I am a big fan of the entrepreneurs, and I think the entrepreneur is a problem solver. That's my answer.
Madhu?
I think from a more optimistic viewpoint, if we look at the market globally and us trying to pitch essentially global sustainability, we believe that, there are opportunities to be gained by everybody in the ecosystem. Includes the governments, banks, financial technology companies, SMEs, and really everybody in between. So when we talk about sustainability, we realize that the opportunities to be gained far outweigh essentially the potential cost of sort of the transformation process. And because if we get to that point, essentially this is what we're going to get to. We're going to get to an intelligent, and the word here is intelligent, ecosystem with a lot of smart technologies provided by a lot of innovative companies to make essentially, if we're talking about the banking structure, daily bank flows, workflows more simple and more manageable. We're going to have the ability to connect automatically millions of customers regionally and globally as well. We're going to have also continuous access to clients' financial data. Why that's important? Because we can automate loan processing and things like that. We can monitor loans more efficiently. We're going to be able to reduce risk processes like liquidity, credit, and things like that. We're also going to retain customers longer. We're going to make small businesses more bankable. We're also going to have the ability, especially for the financial institutions, to acquire new customers much easier, because by connecting the entire infrastructure, and if we are eliminating the regional barriers and some of the language barriers and also some of the laws, we can have customers or bank, like, for example, the Bank of Romania going to Poland or going to some of these other countries, and Bank of Transylvania or some of these other banks can go attend customers in all of these countries on the East Coast. We're also going to have the ability to help businesses succeed, make more money. Essentially, the ultimate automation is going to be the key. We have to get to a point where we can automate all of these processes we're talking about: loan processing, credit management, customer acquisition. All of those things, we can do it through sustainability and smart technology. And by the way, I really want to thank everybody: Sebastian, Madalena, Cosmin. You guys were great. It's really nice to meet you guys for the first time, especially you, Cosmin, and Madalena. So this was very, very enlightening. So I'm very, very grateful. I'm pretty sure we're gonna talk together again.
This was a very interesting discussion. If we have any questions from the audience, if there is someone that would have a question. If not, I want to thank you again to everyone for participating. It was a great, great event, and I hope to see you soon again. Thank you. Have a lovely day, everyone.
See you.
Thank you. And thank you, Malina, for moderating this.
Bye-bye.
Take it easy. Bye-bye.